Hey, do I have something to tell you?
Hello? Hello? Hello?
Blah, 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 blah. Yap, yap, yap.
Settle down.
Hello, my name is Miss Bespoken. Please join me in this free 15-step real estate program and how to buy real estate with other people. You might think that it is the same as buying a home independently. I can assure you that it is far different than you could ever imagine. Welcome to my channel. Please subscribe, like, share, and comment down below. Do I sound like a robot or what? So let's get into it. Please watch to the end of this video for a bonus. There are three types of credit repair: clearing credit, building credit, and disputing a charge to be removed from your credit report. You want the third one. You cannot clear or build credit until bad debt is removed from your credit report. You need to stay away from companies that claim they can build your credit through opening a credit card account with them. These companies will either offer you a low credit limit to start and promise to raise your credit limit over time if you pay your bill on time, or they will offer you a secured line of credit where you open a savings account that will match your credit limit. This may sound like a good idea, but the annual fee for some of these companies are extremely high, which eats into your credit limit. You owe a bill before you get to use the card. If a bank offers you a $300 credit limit and the annual fee is $80, you will only have $220 available credit. Some credit companies will never raise your credit limit or graduate you to an unsecured card. When I was trying to build credit in the 1990s, there was a company that offered to double the deposit on my secured credit card. If I deposited $500, I would have a $1,000 credit limit, and I could keep depositing money into the account for an even higher credit limit. Now that was a good way to build your credit limit using half of the bank's money. Now guys, let me tell you why these types of cards are disastrous to your credit building journey. When you are trying to get approved for a car or a house, one of the things the banks and finance companies look for, besides how much credit you can afford, is how much credit you have paid off over the years. These types of companies base their decisions on how much they can count on you or trust you to pay back. If you have a credit card with a credit limit of, let's say, $500, even though you pay your bill on time every month, your credit report will show that this is the only amount you have ever paid off. Now compare a $500 credit limit to trying to buy a car for $10,000 or a house for $110,000. The credit limit does not compare. Even if you had that card for 10 years, your credit worthiness because of that card is still only worth $500. You also need to watch out for companies that offer credit building loans. These types of companies are not really helping you. They are just out for themselves. They will set you up for a loan that you make payments on. Your payment plan could take up to 10 years depending on how much you sign up to borrow. Wait for it. You never receive the money until you pay off the loan. Now here's the kicker. You pay interest on the loan until it's paid off. Now there is no penalty for paying off the loan early. The loan is set up as a certificate of deposit. On CDs, you are supposed to collect interest on it, not pay interest on it. If you've seen this much of the video, please like, share, subscribe, and comment down below. The first thing you need to do is order all 3 credit reports. You can order the first copy for free. Under derogatory remarks, you will find all your bad debt listed along with telephone numbers to contact the companies. You want to examine this section to make sure the information is accurate. Start with the smallest bill to pay off and negotiate the larger ones. Make sure you have money on hand. It is easier to negotiate a bill when you have money on hand. Try to pay off 1 bill a month and keep all your receipts in case you need them for the final step. If a collection agency is giving you attitude, call the original company and let them know. Quote, "If you want the money I owe, I will pay you in full right now. Otherwise, you will not get paid. I am not dealing with the collection agency because they are too disrespectful." End quote. Now keep in mind that by paying the original company, you lose all your negotiating powers. You need to make sure all your bad debt is paid off before you contact a lawyer. A lawyer cannot help you if you still owe money. Remember, the objective is to have the derogatory remarks removed from your credit report so your credit score will go up. A lawyer does not have control over this action, only the credit bureaus. It also takes time, so have patience. Once you hire a lawyer, the lawyer will require all 3 credit reports. After the lawyer receives these reports, this is the time to mention any discrepancies. Step 1. The lawyer will validate the debt with the credit bureaus. This is the first back and forth, meaning that the lawyer is waiting for an answer. Step 2. The lawyer will make a written request to the credit bureaus to remove the bad debt from your credit report since the debt is old and satisfied, meaning it was paid off. This is the second back and forth, meaning the lawyer is waiting for an answer. This could take months or even years depending on how much bad debt is removed from your credit report. Do not let the time mentioned deter you from doing what you need to do the right way. Keep in mind, the more work you do on your end, the less work the lawyer must do on their end. This means the lawyer can get right into having the credit bureaus remove the bad debt from your credit report. During this time, it is very important to keep up any ongoing payments you have with creditors. Once the bad debt is removed, you will receive a letter from the credit bureau stating that the bad debt is no longer on your credit report and how many points you gained. Now, I am begging you, please wait for this process to end before buying property with someone. You want your name to be on that property as an equal. The last thing you want to do is invest your money and end up losing your part of the investment if the relationship goes bad. Bonus, 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 bonus. If you know anybody that would benefit from these videos, please subscribe, share, like, and comment down below. Continue watching the next video to find out how to plan the purchase of your shared property and how to deal with banks and choosing the right amount of money to finance your home. It is not what you think and will surprise you.
Thank you.